Hey everyone, John Henry here from School of Trade, and today we're going to be talking about options expiration and quadruple witching. So, options expiration is commonly referred to as OPEX. And it's one of the aspects of trading that every trader really should learn, even if you don't trade options, because of its impact on the entire industry, and you'll need to be prepared for the added volatility during that time. It can be a little confusing at first, but when you know the basics, it's easy to remember and manage. So there's really two important things to know. The first thing is OPEX, meaning that the options expire, which is what OPEX stands for, expiration. The options expire on the third Friday of every 1 month. Now, the second part is quadruple witching. Now, quadruple witching means that options, including options on futures, expire on the third Friday of every 3 months or each quarter. Now, when do the options expire? Well, the options they have an expiration date for equity and index options on Saturday immediately following the third Friday of the expiration month until February 15, 2015. On and after February 15, 2015, the expiration date will be the third Friday of the expiration month. Now, why is it a big deal? Why should we really care about options expiration? Well, even if you don't trade options, the fact that options are expiring means that traders around the world who do trade options will be exercising their in-the-money, quote-unquote, options, which add a tremendous amount of volume and unexpected volatility to the markets that you trade. If you don't trade options, all you need to be aware of is that you need to be very careful when you're trading during OPEX, just because of the volatility increase will be dramatic, and you need to be aware of that added risk. So the difference between OPEX and quadruple witching is that quadruple witching occurs at the end of each quarter, and there are 4 different asset classes expiring at that time, which leads to even more volatility during the third week of every 3 months. Now, in addition to that volatility, there is a self-fulfilling sort of prophecy added in, where everyone knows when quadruple witching will occur, and therefore most traders avoid trading, which makes the effect of quadruple witching even more dramatic because there's less people there trading the markets. With an increase in volatility, it basically just starts stacking on top of each other. Now, the definition of quadruple witching is the expiration date of various stock index futures, stock index options, stock options, and single stock futures. All stock options, the contracts expire on the third Friday of each month, once every quarter, on the third Friday of March, June, September, and December. So all 4 asset classes expire on the same day because futures and option investors must close out their positions on those days. They often witness increase in trading volume. Now, the term witching, quote-unquote witching, comes from the fact that in the past, the expiration of futures and options contracts occurred not only on the same day, but at the same time. And this often resulted in a period of greater than normal market volatility, which became known as the witching hour. And due to the increased volatility and frenzied market activity, many investors approach the markets differently on witching days. So, where can we learn more about options expiration and quadruple witching days of the year? Well, there's an options expiration calendar, which is right on Market Watch. And what we can do is I'll just pop that up for you so you can see the link. And looking right up at the top here, it's marketwatch.com/options center/calendar. And this calendar is going to break down every time there's really everything, a holiday, options stop trading, options expire, quarterly expirations. It breaks down everything for you. So what I'll do is I'll put that link underneath the video. But that's a really handy tool to hang on to. You can save it to your favorites, and that way you can come back to it just to make sure that the day you're trading or the week that you're trading isn't going to fall on OPEX, or that you're inadvertently trading into an expiration of a market. So that's taking a look at options expiration and quadruple witching. If you have any questions about it, you can always send an email to School of Trade, and don't forget to check out our trial at schooloftrade.com. And you can also register for our nightly newsletter on our website right at schooloftrade.com as well. So have a good rest of your day. Bye.